Case scenario number 15 now. Case scenario number 15 is on income from other sources on section 56 subsection 2 clause 10 gift transactions, capital gain and clubbing provisions, all three combined together. Mr. Akshaya Biyani celebrated his 26th birthday on 15th May 2022 current year and arranged a grand party at Radisson Blu Hotel. On this occasion, he invited his friends, blood relatives and distant relatives to attend the party. The ceremony was very grand. The feast was also very spectacular. All the arrangements and decorations were absolutely wonderful. This is all nonsense. Unrelated information is given to us just to waste our time. At the end of the party, Mr. Akshaya was awarded by gifts and flowers bouquet as infra. Infra means below, as below. Supra means as above, and infra means as below. Okay, gifts received from, type of gift and remarks. One by one, 7 transactions are covered. 1, 2, 3, 4, 5, 6 and 7. One by one you have to decide. It's a birthday party occasion and not the marriage occasion. If you recollect, there are some exceptions to section 56 subsection 2 clause 10. Some of the exception, one of the exception is if received from relative. Received from mother, 1 22 carat gold chain. She purchased it on the same day, that is on 15th May 2022, on the date of his birthday, 15th May 2022, for rupees 37,822. This will not be taxable under section 56 subsection 2, though gold chain is covered by 56 subsection 2 clause 10 subclause C, movable property. 9 assets are covered, including newly introduced virtual digital asset VDA. It is a receipt from mother, who is a relative, therefore not taxable. Again, for the same reason, receipt from father, 122 carat gold bracelet, not taxable because father is a relative. Purchased by father on the same day for 56,075. This information will be relevant for calculating capital gain. Wife is also a relative. 4 gold rings. She purchased these rings on 15th May 21. Now, unlike father and mother who purchased on the same day, here wife has purchased it on 15th May 2021, that is financial year 21-22, last year, for rupees 35,500 each, but it will not be taxable. Market value as on 15th May 2022 is 37,429 as compared to 35,500 purchase price, but still not taxable because receipt from wife, who's a relative. Again, for the same reason, receipt from sister, who's a relative. Painting is one of the assets covered by 56 subsection 2 clause 10 subclause C out of the 9 assets. This painting is made by herself. She has not purchased from anybody. The fair market value is 45,000, but still not taxable. Reason, it is receipt from sister. Then 5th point, be careful, cousin's brother, that is father's brother's son. In Hindi we call it as chacha's son, that is cousin, 1 gold chain. Now cousin is not covered in the list of relative. If you recollect the list of relative, I had specifically mentioned it while teaching you in the class that cousins are not covered, nana nani are not covered, and cousins are not covered. He purchased it on the same day for 18,200, that is purchased on the same day means purchased on 15th May 2022. 18,200 gold chain is one of the asset covered by 56 subsection 2 clause 10, but 18,200 is less than 50,000. There is another attached condition that the market value should exceed 50,000. Therefore, for the time being it is not taxable, but I am keeping it pending because as far as movable properties are concerned covered by subclause C, we have to see the market value should be exceeding 50,000, but the market value not of each and every asset independently, all the movable properties combined together. Therefore, for this particular point we will keep it pending. Next is closest cousin. Closest cousins. Well, there is nothing called closest cousin and distant cousin, but the institute has used such language, doesn't matter. That is mothers, sisters, sons or daughters. I-20 car. Now I-20 car, motor car is not covered in the list of 9 assets covered by subclause C. Only 9 assets are covered: shares, securities, jewelry, bullion, drawings, paintings, sculptures, archaeological collection, work of art and virtual digital asset. Value is 4,10,000. It is exceeding 50,000, but it is not taxable because car is not covered. Then last, friends and other distant relatives who are not relatives. Cash. Now cash is governed by section 56 subsection 2 clause 10 subclause A. These all were movable assets. Movable assets are governed by subclause C, but cash is governed by subclause A. Cash should be exceeding 50,000. It is exceeding 50,000. Therefore, this will be taxable. Now list of 7 assets are over, all the 7 points are over, this was the last transaction. Therefore we can conclude that this 18,200 is certainly below 50,000. Therefore again it will not be taxable. So out of 7 transactions, if you observe, first 6 are not taxable for some or the other reason. Only the last one is taxable, which is cash. Okay. Akshaya desires to set up a new manufacturing unit with his friend in partnership on 1st December 2022. His birthday was celebrated on 15th May 2022. Now 1st December 2022, that means after around 7 months, 6.5 months, he is setting up partnership firm with friends. For making investment in the firm, he sold following jewelry which he has received on his 26th birthday celebration as gift. Something received from mother, father and cousin brothers gifted gold chain, gold bracelet and gold chain. All the 3 are jewelry. All 3 have been sold. These are the sale consideration. Now if you can understand, the asset is gold chain, gold bracelet and gold chain. When would they become long term? They will become long term only if held for more than 36 months. And here they have been held for less than 36 months. How? So I'll explain it to you. 15th May they have been received, 15th May 2022, and sold on 1st December 2022. However, the date of acquisition is not to be counted as 15th May 22. Date of acquisition will be the date on which previous owner acquired, as per section 49(1) along with explanation 1 to section 2 clause 48. Okay, so what has he sold? He has sold something received from mother, father and cousin's brother. Now when did these people acquire? So mother and father acquired on the same day. It is given transaction number 1 and transaction 2. Mother purchased on the same day, 15 May 2022. Father also purchased on the same day. And then the third one is cousins brothers. Now cousin brothers, that is governed by fifth point, purchase on the same day. All 3 of them have purchased on 15th May 2022. Therefore calculation will have to be made for period of holding will be computed from 15th May 2022. 15 May 22 to 1st December 22, period of holding is definitely around few months. It is around 6.5 months. 6.5 months, definitely less than 36 months. Therefore all of them will be short term. However, 42,150, 60,000, 180 and 20,600 are sale consideration. Which section number will apply for cost of acquisition? Section number applicable in all the 3 will be section 49(1). That is, cost of acquisition will be cost to the previous owner. Cost of acquisition will be cost to the previous owner. Even with regards to gift receipt from father, section 49(1) will apply, and even with regards to gift receipt from brothers, cousin brother, provided he has not been taxed under section 56 subsection 2. First transaction not taxable, second transaction from father not taxable, and transaction number 5 from cousin brother again not taxable. All the 3 transactions were not taxable. Therefore 49(1) will apply. If previous gift transaction was taxed under section 56 subsection 2 clause 10, if assessee was taxed, assessee Akshaya was taxed, then section 49(4) will apply, and the cost of acquisition will be FMV as on the date of taxing, as on the date of receipt of gift. But if not taxed under 56 subsection 2 clause 10, then cost of acquisition will be cost to the previous owner as per section 49(1). So for all the 3 transactions he was not taxed at the time of receipt of gift. Therefore cost of acquisition will be cost to the previous owner. How much is the cost to the previous owner? Mother, father and cousins brother. Transaction number 1, 2 and 5. Transaction number 1 37,822. Transaction number 2 56,075, and transaction number 5 18,200. 37,822 difficult to remember, so 37,822 we'll have to keep checking again and again. 37,822, then 56,075 for gift receipt from father, 56,075, and as far as cousins are concerned it is 18,200. 18,200. So how much will be the amount of short term capital gain? There is no brokerage, nothing is given. So let's calculate. 42,150 sale price for the first transaction minus 37,822. 4,328, I am keeping it in memory. 4,328. Second transaction is 60,180 sale consideration. Cost of acquisition is 56,075 as per 49(1). 4,105, I am keeping it in memory. 4,105, and the third transaction 18,200 is the cost, 20,600 is the sale consideration minus 18,200. 2400. Again I am adding it to the memory. 2400. The total short-term capital gain which will be chargeable to tax in hands of Akshaya will be 10,833. 10,833. None of the 10,833 part, none of these three gains will be clubbable in the hands of previous owner, that is donor, because gift received from mother cannot be clubbed. Income therefrom is not liable for clubbing. Amount received from father as a gift and capital gain arising therefrom is not liable to be clubbed in hands of father, and so is the case in the case of gift received from cousin brother. Whatever is received from wife, that is spouse, transaction number 3, anything received from wife and sold and capital gain arises, then capital gain will be clubbable in the hands of spouse, wife, under section 64 subsection 1 clause 4. Then clubbing provision will apply only with regards to capital gain arising in case of gift received from wife and not with regards to gift received from mother, father or cousin. 10,833 is a short-term capital gain. His wife gave him, question doesn't end here, it's a lengthy question. His wife gave him 1 lakh rupees as a gift. Now wife has already given him 4 gold rings worth 37,429 each into 4, but apart from that wife has also given him further 1 lakh rupees so that he could invest sufficient money in his unit, that is which is manufacturing unit in partnership. So 1 lakh will keep it in mind, gift from wife. On 1st December 22 he invested 6 lakh rupees including the amount received on sale of above gifts, that is 42,150 plus 60,180 plus 20,600 plus his own funds and the amount received from wife. Amount received from wife is 1 lakh, something from sale consideration, and remaining amount on his own 6 lakhs he is invested, and his friends also invested 4 lakh rupees in the firm. Now 4 lakh rupee is invested by friends in the firm. Friends have not gifted him. The way his wife has gifted him 1 lakh rupee, friends have not gifted him, so that 4 lakh rupees cannot be taxed under section 56 subsection 2 clause 10 subclause A. Money exceeding 50,000 rupees will not apply because friends are not gifting him, friends are investing along with him in the partnership. It's a partnership business. It's given here clearly that it's a partnership business along with his friend. Okay, so 4 lakh invested by friends and 6 lakhs invested by himself. Total investment is 6 lakhs plus 4 lakh, 10 lakh rupees. This 6 lakhs includes 1 lakh received from wife and sale consideration of various assets, which is immaterial. On 1st February 2023, when did he start the firm? 1st December 2022. Then on 1st February 2023, that is after 2 months, his wife again gave him 1 lakh rupees as gift. So how much is received as a gift from wife? 1 lakh already received here, and again 1 lakh rupees received from wife here. So twice 1 lakh rupees wife has given, total 2 lakh rupees is gifted by wife. Clubbing provisions will be applicable in case he earns anything further from gift received from wife. Okay, however, if you recollect explanation to section 64 subsection 1, then any income arising from business from the gifted amount received from wife will be clubbable only from next year onwards, because we have to see the position of gifted amount from spouse as on 1st April of the given previous year. So wife has gifted him 1 lakh rupees on this, 1 lakh rupees is gifted on 1st December 22, and this 1 lakh is gifted on 1st February 23. So as on 1st April of the relevant previous year, 1st April 2022, there is no gift received from wife. Okay, proceeding further, wife again gave him 1 lakh rupees as a gift to invest such money in the firm, and apart from that he invested 50,000 more from his individual saving, and on this day his friend also invested 1 lakh rupee in the firm. So 10 lakh rupees were already invested, this 10 lakh, 6 plus 4, plus wife gifted him 1 lakh rupees plus 50,000 of his own, and friends also invested 1 lakh rupees. Now the total investment in the firm is 12 lakh 50,000. We don't know whether this is a relevant information or not, but we will see. We have just jotted it down because we came across this information. Since the firm is a manufacturing unit and at initial stage the firm requires sufficient fund, so Mr. Akshaya sold his wife's gifted gold rings. 4 gold rings were gifted by wife, sold for 40,000 each into 4 as on 31st March 2023, last day of the year. So 40,250 is a sale consideration each into 4 gold rings is equal to 1,61,000. will be the sale consideration. However, this is not his own gold ring, this was gifted by spouse, gifted by wife. Therefore, if any capital gain arises therefrom, then it will be clubbable in the hands of wife. Section 49(1), cost of acquisition will be, this is the sale consideration, cost of acquisition will be cost to wife, cost to the previous owner as per section 49(1). However, how much was the cost to wife and when did wife acquire? He is selling it on 31st March 2023. This is the date of sale. First, let's work out short term or long term. Wife acquired it on this transaction, transaction number 3 out of 7 transaction. Wife had gifted him 4 gold rings which she purchased on 15th May 2021. So period of holding will start from 15th May 21 and not from 15th May 2022, the date of receipt of gift. 15 May 22 he received from wife, but wife has purchased on 15th May 21. So period of holding will start. See, as far as gift received from mother father is concerned, they purchased on the same day, 15th May 2022, the date of his birthday. But wife purchased on 15 May 21. Therefore, period of holding will be from 15th May 2021. Period of holding will be from previous owner 15th May 2021 till 31st March 2023, the date of sale, 31st March 2023. What will be the period of holding? Definitely not even 2 years. 2 years have also not been completed. So period of holding, what is the asset? Asset is gold ring. The period of holding should be more than 36 months in order to be called as long term. Here period of holding is certainly less than 36 months. Therefore indexation will not apply. It is a short term capital asset. Okay. Now sale consideration is 40,250 each, 1,61,000. Cost of acquisition will be governed by section 49(1), will be cost to the previous owner wife. Now previous owner wife, the market value as on the date of gift was 37,429, but we are not concerned with that. As per section 49(1), the cost of acquisition will be equal to cost of acquisition for Akshaya will be cost to the previous owner 35,500 each, but 35,500 each. So 35,500 into 4 gold rings into 4 is equal to, it will be 1,42,000, but let's calculate it out. Oh yes, 1,42,000. 1,42,000. The short term capital gain therefore will be 161 minus 142 will be 19,000. However, this short term capital gain 19,000 will be clubbable in the hands of his wife under section 64 subsection 1 clause 4. It cannot be taxed in the hands of Akshaya, it will be clubbed in the hands of wife. His wife's name is not given, so we ignore it. He deployed the funds as partners capital in the firm on 1st April 23. That's okay, that will be the story of next year. Based on the facts of the case scenario given above, choose the most appropriate answer to the following questions. 15.1. What is the amount of capital gain taxable in the hands of Akshaya for previous year 22-23? Now taxable for Akshaya, this 19,000 will not be taxable. What will be taxable will be the capital gain which we just calculated it out here, 10,833. 10,833, that is 4328 4105 plus 2,400. We already calculated it out. 10,833. Our answer is short term capital gain A, 10,833. Let's check what's institute's answer. Institute's answer for 15.1 is A, 10,833. Our answer is correct. Now 15.2. What is the gift amount not considered as income under section 56 subsection 2 clause 10? Not considered as income. Now not considered as income, what is considered as income? That we have already calculated it out. But not considered as a gift will be this, wherever we have placed marking not taxable, 37,822 not taxable, 56,075 not taxable. Here would be, now here not taxable will be 37,429 and not 35,500. 35,500 is the cost of acquisition. This is received from wife, therefore it is not taxable. But if it was taxable, it would be 37,429 into 4. What is taxable under section 56 subsection 2 clause 10 subclause C would be the market value as on the date of receipt, FMV. So when we say what is not taxable or what is taxable, it will be 37,429 into 4 rings. Next is sister's painting. This is also not taxable, 45,000. And then gold chain from cousin brother, 18,200 purchase price on the same day, not taxable. And then I-20 car 4,10,000, this is also not taxable, therefore we'll take it into account. However, apart from these four, these how many transactions are there? 1 2 3 4 5 6. Apart from these 6, cash is taxable. Apart from these 6, there are 2 more gift transactions from wife of agreed not on a date of birthday, but his wife has gifted him 1 lakh rupees, and again wife has gifted, we have placed markings here, on 1st February 23, again wife gifted him 1 lakh rupees as gift. So these 2 gift transactions are also not taxable under section 56 subsection 2, because they are received from relative wife. So how much is the total amount not taxable? These are 2 lakh rupees from wife, 2 lakh plus something from this table. We'll calculate it out. So let's quickly calculate. 37,822 plus 56,075 plus 37,429 into 4, that will keep pending, plus 45,000 because we'll have to multiply it by 4, plus 18,200 plus 4,10,000 for I-20 car, plus 2 lakh rupees from wife, and 767,097 plus 37,429 into 4, 149,716, total 916,813 not taxable, 916,813. So what is the answer? Our answer was 916,813. That means C, answer C, 916,813. Let's check what's institute's answer. Institute's answer is also 916,813. Now many people must have missed out 2 lakhs extra from wife, and they must have calculated it to be 716,813 if 2 lakh rupees from wife is ignored. 15.3, our answer is correct. 15.3, now what is the gift amount taxable in the hands of Mr. Akshay for previous year 22-23? Now taxable amount is only one. If you observe, only this particular transaction, cash transaction, 1,51,000, that is only taxable. Rest all is not taxable, not taxable, not taxable, not taxable. Out of 7 transactions, 6 transactions are not taxable. Only 1,51,000 cash from distant cousin and relative and friends. So answer is 1,51,000 A. Let's check what's institute's answer. Institute's answer is also A for 15.3, 1,51,000. Our answer is correct. 15.4, the last point. Is any amount taxable in the hands of Akshaya's wife in respect of sale of jewelry by Akshaya? Yes. If yes, then what shall be the taxable amount? Taxable amount is 19,000. We already calculated it out here. This one, 19,000. Short-term capital gain. Sale consideration was 1,61,000. Cost of acquisition was 1,42,000. So difference amount 19,000 is taxable in the hands of wife. Akshaya's wife, 19,000. C is the answer. Let's check what's institute's answer. Institute's answer is also C. Our answer is correct. With that, this case scenario comes to an end. See you in the next video with case scenario number 16.